Well, welcome to this segment of Next Matters Conversations. Our topic today is who protects you? Insurance questions that both buyers and sellers should be asking. I'm Chantel Treadway with Keller Williams, and my guest speaker today is Rob Holzman with the Insurance Artist. Thanks for coming today, Rob. We do appreciate it.
Of course. Thanks for having me, Chantel.
Yeah. So today we're talking about one of those things that people rarely think about until something goes wrong, and obviously insurance. I think we get the coverage, we pay the premiums, and then we kind of go about our day, and we don't really think a whole lot about it. And I think the lack of knowledge really sets us up for, hazards that are out there that we could be facing and we don't even know it. So today, while we're mostly going to be focusing about people that will be involved in a real estate transaction, I think everybody today is going to walk away with something that they definitely should have known about insurance. So we'll definitely get on that. So when people hear about insurance, I think they usually think about, buyers have to get the coverage before closing. But the insurance is definitely affecting the sellers too, and sometimes in ways that they do not expect. So for sellers, it's things like, what if a tree does fall on your home while it's listed? What if a buyer's inspector gets hurt? What if there was a claim filed years ago and suddenly it becomes a question during the sale? So protection is definitely important on both sides. I think for me, the common misconceptions, like let's start with sellers again, well, my home's under contract. I don't need to worry anymore. But the reality is they're owning that home until closing. So very important. And then on the buyer side, oh, it's just something that the lender requires. I'll do it. I'm not going to think much about it. But again, the insurance is protecting people from major financial surprises. So it's something that we really need to pay more attention to. Even from my perspective as an agent, I think a lot of the situations that I see people not thinking about enough is things like storm damage while it's listed, a water leak before closing. Goodness knows how many times I have seen it's been dry as a bone for 3 months. Suddenly we get a gully washer 24 hours before the buyer walks through. Guess what? The basement's leaking for the very first time. Whose problem is that, right? So it can be huge. It can definitely stop everyone in their tracks. And then vacant home concerns. That's a whole nother can of worms that I would like you to kind of point out. There are definitely some differences there. And then previous claims that could affect the insurability. So even if you aren't buying another home immediately, these things really do matter. And then on the buyer side, I think what nobody thinks about is what about replacement cost versus market cost? And what does that even mean? They're like, I don't know what that means. What about older roofs or older systems, like heating and air? Is that a big deal? What about flood coverage? Do I need it? What about special coverage needs? People definitely don't think about that enough. And then what about your deductibles? So the cheapest policy is definitely not always the best policy. And that is something that I try to point out to people in a lot of areas that looks like a great deal, but there's usually a reason for that. So now I can help people on the real estate side for sure, right? But I always tell people know where your expertise ends and bring in the right professionals. So today I did invite our insurance expert to come in and talk to buyers and sellers about the things that they should know before they become problems. So Rob, I am going to turn it over to you. And maybe you can help us with, some of the biggest surprises that you see buyers and sellers facing and maybe kind of expand from there.
Of course, Chantel. Thank you so much. And thank you to everybody joining us today. Again, my name is Rob. I'm the owner of the Insurance Artist. I call myself the OG Insurance Artist because I hate the idea of saying a CEO or founder. I'm a local independent agent, just, not dissimilar to all of you in that I work hard for local folks finding them better coverage and better rates in their insurance. So again, thank you so much. And thanks to all of you for spending some time with us today, talking about the very sexy thing, which is insurance. Everybody loves talking about insurance all the time. And I think the biggest issue with insurance is the fact that you just don't realize that you need it until it's just too late. And again, I know that sounds cliche, but goodness, it is the name of the game in insurance. Insurance really, not worth the paper it's printed on if if you don't really understand what it is that it covers, what it doesn't cover, and most importantly that you have a connection with an agent or the carrier to make sure that you can ask the questions that you need to. So we handle a lot of real estate transactions, work with all of our clients, and certainly a lot of real estate brokers like Chantel and others to make sure that coverage is in place, not only for sellers, but also for buyers. There are certainly a lot of misconceptions. One of those being with regard to replacement cost to market value. So let me just start there.
Okay.
The fact that, most of the time as a buyer, you're paying a certain purchase price, and that's what you expect the insurance to be able to cover. At least that's what the mortgagee expects that to cover. When in reality, what we're talking about here is your interest in the property, not just the mortgage company. And so what we care about really has nothing to do with market value. And of course, we all understand market value is based on comparables within the area, amongst other items. But we really don't care what other properties cost to replace. I think it is very simply in the real estate industry, I understand sometimes we overthink these things
Mhm.
and go into these terms and we're like, well, it doesn't really mean this or that or the other thing. And in reality, replacement cost means just that. How much does it cost to replace that structure? And of course, many, many times you're going to see that cost go up and down depending on supply and demand and inflation and availability of goods, the costs of labor, lots of different things that come into play. So, really what I always share with my clients is that there are three numbers that you always think about when you think about your home. You think about how much you're being taxed, which is usually the lowest of the three. Again, the market value, which is the cost to you, the consumer, and then ultimately the replacement cost. And in that order is the order that you should see those numbers. You should see the property value for taxes be the lowest. Market value is usually in the middle, but replacement cost, generally speaking, is going to be higher. We usually see 15 to 20% higher than the market value. Again, the reason behind that is because it costs a lot more to replace something than the true value of it. So when we're
Right.
working with clients, we always need to have that conversation. And then again, certainly with realtors like yourselves and also with mortgage companies to make sure that they understand the true replacement cost.
Right.
I'll also mention here with regard to other issues that we see, other myths, if you will. That replacement cost is incredibly important. And when I say replacement cost, I'm not just talking about that structure. I'm talking about roofs, especially. Roofs are a big, big
Mhm.
deal in our industry these days.
Yeah.
We've had catastrophic event after catastrophic event here in Louisville that has caused us to be in what's called a hard market in the insurance industry, which means underwriting is more difficult
Yes.
and the prices cost a lot more because of the costs associated with those claims that we've had. There hasn't been many carriers in our area that have made any money over the last 2 or 3 years. Oh, woe is me,
Ugh.
insurance carriers. I understand that and totally respect that. But we do need to understand why it is that those rates are increasing. And it
Right.
is because of the cost that it takes to replace these things. A lot of carriers these days are going to what's called ACV. It's actual cash value, depreciation on your roof, on a roof. And gosh, ending up with ACV on your roof in a nutshell means that you're not going to get a whole lot at all, if anything, for the replacement of that roof. So,
Hmm.
of any and all of the misnomers and the issues that we see when we are helping clients purchase new properties, they bring their declarations pages to us and they say, Rob, our mortgage
Mhm.
company won't cover this. What's going on? And we see the issue is, in fact, that their roof is considered ACV instead of replacement cost
Ah.
because mortgage companies understand that's a big chunk of cash out of their client's pocket. And the question then would be, okay, do they have enough to actually replace
Right.
that? So replacement cost is by far the way to go there.
Yeah. Good deal. Well, what about like on the seller side? Like, because I do see so many of these coming up more and more. They're listing the home, things go wrong. Here's what I've even seen happen. It's happened either literally during the closing, and then it's suddenly whose insurance policy covers it.
Hmm.
Or they're going to take post possession, maybe the seller's going to stay for maybe 7 more days. Something
Hmm.
happens, a tornado happens, something,
Hmm.
whose policy covers that? And I think people really need to understand that.
Yeah, and that's a tough situation there. I will say that, as it relates to up to the time that the property has been sold, it is incredibly important for the seller to continue with insurance. Now, we have seen more than one occasion, unfortunately, Chantel, to your point, there's a huge gully washer that comes through, there's a hailstorm, there's a wind event that occurs the day of the closing, let's say. Who's ultimately responsible? The
Mhm.
question would be, or the answer would be that it is ultimately the seller that's
Mhm.
responsible for those types of claims. The seller is responsible until the day of closing, which ends at 11:59 that day. Closing's at 1 p.m., let's say today, June 17th. That insurance policy should not end on June 17th because June 17th is 12:01 a.m., which was this morning.
Gotcha.
So I think a lot of insurance carriers get that wrong. A lot
Hmm.
of sellers just immediately think, hey, I'm closing today. Let's close it. Let's cancel the policy
Yeah.
today. No, you close the policy effective the next day. Now, Chantel, you bring up a great point here. What happens post closing? There's situations that occur all the time where you close on a property, you have the buyer that takes possession of the property. Ultimately, the answer really should be that both parties have an insurable interest, and both parties should have a true homeowner's policy on the property. When we have run into those issues before, ultimately it is the buyer's policy that will respond first, with the understanding that a seller's policy will respond second when and if that were the case that they needed. We've talked a lot here about property already, but there's the
Hmm.
whole other side of homeowners insurance, which is liability, i.e., what
Right.
you do to someone else, what
Right.
happens on that property when you own it, i.e., slips and falls, dog bites. You have a welcoming party. Everybody gets excited. You got a big old party happening on the weekend to show everybody your home.
Yep.
Somebody slips and falls. Somebody drinks too much. Someone falls off the deck. What happens when that liability occurs? You really need to make sure that you're well protected there. And that's a more affordable part of the policy, but it is incredibly important to make sure that you're covered with the right amount of coverage there for it.
Now, do you think that's something that is normally in a policy for, on a homeowner's policy? Do they need to bump it up while they're listing their home, do you think, or just maybe just review it?
We always suggest, with regard to liability, we always suggest that you have at least $500,000 in liability protection. Generally speaking, our homeowners carriers have three different types of, or three different levels of liability coverage: 100,000, 300,000, and 500,000,
Okay.
500,000.
Okay.
My agency standard is that we don't write anything less than 500,000 for two reasons. Number one, it is the best that we can offer at 500,000, but equally as important, the difference in rate between 500,000 and 100,000 bucks generally is about $12 a year,
Oh my.
about $1 a month. Why wouldn't you want that better coverage?
Right. Yeah.
So absolutely, $500,000 in liability protection, without a doubt, provides what you need.
Okay. Now, what about buyers as they're, overwhelmed already and that they're being told, do this, get that. And we're
Right.
actually asking them to do it much sooner in the process now because the rates have gone up so much. We want to make sure that they can afford their payment before everybody starts going down that rabbit hole.
Right. Right.
So, what would you, if somebody comes into you and they're a little overwhelmed, what would you want to point out to them most?
Well, I'm not a huge fan of bashing my competition. A
Mm.
lot of folks are saying, "Oh, State Farm is a terrible carrier." Allstate, Liberty Mutual, who we represent, by the way. I'm not a huge fan of doing that. And one of
Mhm.
the things that all of these big box carriers get right on TV when you see the commercials is bundling. So I really strongly recommend that all of our clients look at bundling to maximize those discounts. Our carriers, for many different reasons, need to know the entirety of their risk, right?
Mhm.
What kind of cars are they driving? How many cars do they have? How many drivers do they have? How does that impact the home? They're willing, with all of that, for all of that data, they are willing to give you a pretty significant discount. And generally speaking, we see 15 to 20% on both sides between the auto and the home for our carriers. So,
Okay.
again, I think that's a simple thing, but just to be clear, it is something that a lot of those carriers online and the ones that you see on TV get right. The other thing I would mention here is, and something that buyers should be looking at, is with regard to deductibles. Most carriers now are going to separate deductibles between what happens generally on in a claim and then for wind and hail. So we call one all other peril deductible, and then one which is wind and hail.
Okay.
So something comes through, they're going to require at least 2,500 for wind and hail deductibles. You can go as low as $500 on a regular deductible. We recommend nothing less than, or nothing more than, I'm sorry, nothing less than 1,000. So usually 1,000 and then 2,500 for wind and hail. I would argue that it makes sense to look at a $2,500 deductible overall. So just a standard all peril $2,500 deductible.
Mhm.
It really offers it offers a low amount of responsibility for our clients in $2,500, but it also, and more importantly, which also, by the way, means a little bit of a lower premium for our clients. But also equally as important, it provides it allows our clients to not use homeowners policies as a maintenance plan, right? So maintenance plans are, the home warranty type things, right? And if you've got $1,000 deductible and there is a pipe burst of some sort and it costs $2,500, you think to yourself, well, it's $1,500. I don't want to have to spend it. That's why I have insurance, right? And
Right.
so they will make that claim. They will go ahead and file that claim. That claim sticks with you for at least 5 years. We've seen a lot of carriers going to 7 years for a look back. And I'm telling you, that $1,500 that folks are taking
Right.
ultimately over that 5 to 7 years is going to cost you double that, if not more, because of the surcharges that these carriers make. Low dollar claims impact impact your insurance so much more than the high dollar, what we call an active nature or catastrophic event type.
Right.
There's not much you can do about those types of things.
Right.
Wind and hail are gonna happen. It's
Yeah.
unfortunate, but it is going to happen, and our carriers understand that. A small pipe burst that really you should and could handle on your own. Those types of smaller events. Really, you should try to definitely talk with your agent before filing those types of claims because it will impact you tremendously for years.
Good deal. Good deal. Well, I definitely want to open this up to everyone with us. Does anyone in the group have questions that they would like to ask or a question that you would like to ask?
I have a question.
Okay, go ahead, Rachel.
Why can two homes with similar prices have very different insurance premiums?
Rachel, great question. Thank you so
Thanks.
much. It is an incredibly important question. Insurance can be very objective, meaning that you've got one neighborhood and the carrier is going to look at that neighborhood and see similar homes and shop and put the values and the costs all the same, but can also be incredibly subjective. One home next to me may very well have 3 or 4 claims that are following that person into that home. And so while we are insuring the home, we're also insuring the person in the home.
Mhm.
And if that person in the home is more likely to file a claim, like we've seen, and like I referenced there earlier, our carriers are going to recognize that and they're going to charge more for that. So while we try to be objective, and again, looking at larger neighborhoods, larger zip codes, and try to figure out weather patterns and all of those things, really it is incredibly subjective as it for not only home insurance, but auto insurance as well, probably more on auto insurance because you're doing that every day and you have that habit of how you drive as opposed to where your home sits. So We get that question all of the time, and unfortunately, we without running reports, without really seeing what's going on in each household, it's hard to say why. But I will also say that if we are, for example, in a cul-de-sac and we've got 5 or 6 different homes, and all of those residents of those homes, of course, the replacement costs are going to be relatively similar. Let's say that none of those folks have any claims. We have plenty of cul-de-sacs and neighborhoods where we, represent folks like that. I've done some research there to say, okay, what do those rates really look like on their home and their property? And they are very similar. They ultimately end up very similar, but it does usually come down to, okay, what else is happening behind the scenes with these folks? Are they considered a higher risk? Are they more likely to file a claim as opposed to other times?
Okay.
Thank you very
Anyone
much.
else? I'm sorry.
Thank
Anyone
you.
else?
I got one.
Okay.
I
Go
don't
ahead,
take questions from Bellarmine grads.
Ted.
Hey, what's up? Fellow Bellarmine grad, go Knights.
Yep. What is like the most common mistake you see with like buyers or sellers with homeowners insurance?
That is a great question. I think that the 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 main issue that I see, especially for buyers, is their lack of willingness to understand the endorsements, the add-ons that you can include in your home, which provide much better coverage, but also provide you with the things that you assume are covered. And I'll give you just one quick example, which is water backup coverage. Everyone thinks that if you've got water coming up from your sump pump, for example, because your sump pump stopped working and you've got it coming in, and you've got carpet damage, you got drywall damage, couches and other furniture, perhaps some electronics. Like, well, of course this is covered. It's not a flood. This just happened in my house, similar to a pipe burst. Ultimately, if it's not added to the policy, it will not be covered. And I think a lot of folks just don't take the time to really look at that. One other quick example, which, knock on wood, hasn't happened here in a very long time, but certainly could because we are within the area, is earthquake coverage. Earthquake coverage is something that is not included on a standard homeowner's policy. You have to add that in to make sure that you're well protected. And as I started out by saying here, when you realize you need it, it's usually too late to cover. And both of those items there, Tate, they don't cost a lot of money. You're talking about $100 a year, probably on average, to add in $25,000 in water backup coverage. And that's going to provide you not only with the coverage to take care of those things that have been damaged, but also be able to hire somebody to come in with the fans and the restoration companies that come in to really take care of that. Otherwise, we're just not going to be able to cover it at all. So I think just for buyers, my biggest recommendation would be, look, this is not rocket science, and it doesn't take hours upon hours to talk with an independent agent or any agent for that matter to learn the ins and the outs of a homeowner's policy. You're investing so much time, so much money. This is the biggest asset that most of us have. All of us understand that. I know that's verbiage that you all use even more than us. So let's take 10 to 15 minutes and make sure that you understand what's included, what's not included, and better protect yourself. The slogan at the Insurance Artist is better coverage and better rates. And that's not just a random slogan. I recognize, and our carriers have confirmed, that when you have better coverage, you will receive better rates because our carriers understand the more educated that you are about insurance, the more likely you are to be safe as a driver, the more likely you are to not file that small claim on your home. So better coverage, taking the time to understand what you've got, is short-term and long-term going to provide you with a better rate. The better educated you are. It's not dissimilar to, going to college or a trade school and, becoming a professional at what you do. You're going to make more money when you're more educated. It's not dissimilar in insurance. The biggest misnomer in insurance is that insurance has something to do with money. Insurance doesn't care at all about money. We don't care at all about money. We're not about money. or about risk. And the more likely you are to have a claim, we're going to charge you more. So you've got to figure out how to make yourself and how to make your clients look like less of a risk, which ultimately will save you money.
Good deal.
And go Knights again.
Yeah, sure.
Anyone else?
iPhone 147 has their hand raised. Fun.
That's me. Sorry, it's
Oh,
Kim.
fun.
Sorry, I'm on the phone. Can't figure out how to get my name on there. So on the same lines of not filing a claim if it's something that you can take care of yourself. Is there and I guess I'm thinking about this more from auto insurance perspective because cars are so freaking expensive to fix now.
Mhm.
Is there a dollar limit? Like if you have $1,000 deductible and if you can afford it, then you shouldn't do anything. You should pay for anything that's $5,000 or less. I mean, is there kind of a general framework, or does it just depend on personal situation?
Well, I mean, it does. It's a great question. It certainly does. It does depend on the type of savings that you have for those issues. $1,000 is no joke. I mean, I get that and respect that, that's no small chunk of change. And you're absolutely right. You touch a car these days and it's going to be a minimum $2,000 to $2,500. I mean, goodness, the costs these days are just extraordinary. I would encourage folks, and I always do for folks that call in with a claim, to get an estimate first. Now, most of our carriers have now come into play with what's called surcharge estimates, so that we can, as your independent agent, we can run that within our systems before you file the claim to give you a little bit of more of a heads up as to what that claim might very well cost you over the next 3 to 5 years. Again, that's the kind of discussions that not a lot of folks want to have. They're like, oh, if I got a claim, I'm just going to turn it into the carrier directly. I don't want to have to listen to the mumbo jumbo of an agent and try to talk me out of filing a claim. That's not the business we're in. I'm not interested in talking folks out of a claim. If somebody has a $500 deductible and it's a $1,500 claim and they don't have that $1,500 and they're, just, paycheck to paycheck and moving and struggling and facing, I get it. Let's file the claim and we'll make it work. Because that's, again, it is really what you're paying for. But being more knowledgeable about things before you file claims is so important. Certainly, again, on the auto side, but I'll relate that back to real estate, especially with roofs. Folks call in immediately. Oh, we had a hailstorm last night. Time to file a claim. No, 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 no. Let's work with a roofing contractor that we all trust and we all know. Let's get them out there and take a look before we file a claim. We're able to do that more on the independent side than the captive side, the State Farms of the world, because technically when you're talking to someone at State Farm and you're about a claim, they're supposed to report that as a true claim.
Mm-hmm.
Guys like us, we're able to chat with you further, say, hey, talk to so-and-so, or if you have a roofing expert, let's get them out there first. Let's make sure it makes sense to file a claim. And then when it does, we have an expert in our corner already. So when an adjuster comes out to look at that, either the car or the roof, that roofing contractor is able to be there to say, yeah, see, this is what I see, this is what I see, this is what I see, pointing everything out, making the claims process even smoother. So additional communication is always your friend when it comes to come claims time. Definitely be talking with your agent.
Yeah. Anyone else?
I've got one.
Okay. Go ahead,
What's
mister.
up, Luke?
What up? I was wondering, can past claims, can they affect a future buyer?
So let's say you're buying a house. I think what you're asking here is you're buying a house. That house has 3 or 4 claims attached to it in the last 3 to 5 years. Will that impact your ability to get insurance? The short answer is yes. The longer answer is it is a little bit of a gray area because it depends on the type of a claim. If you, for example, and we see this on nearly every client that comes in here now because of March 15th, 2025, March 3rd of 2023, 2 days which will live in insurance infamy for a long time here, wind, storm, and a hailstorm. We see those claims pop up on the property, not connected to the client, but they are on the property. Those claims are not going to impact you when you're buying that house. In fact, they will help because we're able to prove and show evidence that you have a newer roof. So when you have a newer roof, your insurance rates will decrease because there's much less likelihood that the roof is going to be damaged. Again, just like I mentioned to Tate here, insurance has nothing to do with money, everything to do with risk. If we've got a really stable, solid roof that's a year or two old, we're gonna be able to insure that property for much less. So we are able to see those things. On the flip side, if there are 3 or 4 claims for, let's say, burst pipes within that property, and we can't show evidence that those pipes have been replaced in the last since that last claim, yeah, our carriers are going to have some issues there. It's not going to necessarily impact you as much as it will impact our underwriters to say, hey, we need to get evidence that either this has been repaired or this will be repaired. We're going to need to see pictures, and evidence that those things have been taken care of. Otherwise, just like George W. Bush said, right? Fool me once, shame on you. Fool me twice, you ain't going to fool me again. You got to be careful with that. Again, it's another risk. You just got to be careful with.
Well, I know we've run a little long, but it just in a nutshell, vacant properties. I run into that a lot because I'm doing so many estates now, and people don't understand that has to be different coverage. Could you just briefly cover that?
It really does, Chantel. It's a great point. I'm glad we're able to cover this. Homeowners insurance assumes it is your primary residence. There is someone living there. There is someone paying attention to that property. It is a part of the risk factors that we look at. When you have a vacant property, the whole game changes because there's not someone there to handle, for example, a burst pipe or a sewer backup issue. Someone isn't going to be there all the time to see that. So there are absolutely options available for vacant properties, and the vacant property policies that we have are tailored very differently, even on the terms, meaning the length of the policy. Again, most homeowners policies, if not all, are annual policies, 12-month policies. We have found vacant property policies that are certainly 12 months, but also 6 months. And also 3 months. So you can have that smaller policy available to you that covers everything that you need, that understands the risk that we're looking at, but you don't have to pay for 12 months. If it's on the market, it's vacant, let's put a 3-month policy on it. If it doesn't sell, or if it's in escrow, or if it's moving forward, we can do another renewal of that policy. But it is incredibly important to make sure that the coverage is available. One other quick caveat I'll say to that is that if we're talking about a small amount of time, right? So someone closes on a property, moves out, and is closing on their old property in a week or two, have them contact their agent. There are absolutely stipulations within our policy contracts that allow for that. So you don't have to immediately go out, cancel your homeowner's policy, bring in a vacant property policy for 2 weeks. We understand that's the name of the game. That's how these things work. Generally speaking, 30 days or less, generally speaking, is what our carriers will require. But anything over 30 days where it's vacant, you're going to have some issues there. You're going to have somebody checking on that, and our carriers get a little iffy on that.
Well, this is good stuff. Thank you so much. I do
you.
appreciate everyone joining us today. Our goal with these conversations is just to take topics that seem complicated and just make them easier to understand. So if any of you all have questions after the fact, definitely reach out to us because we're always a resource and we're always happy to talk. But again, and as always, follow us for more conversations like these made simple because next matters. We really appreciate it. Thank you, everyone. Bye-bye.
Thanks, everybody.